Hello guys and girls, what's up? What's Gucci? Today I just thought I needed to share this with you guys. So this will help you minimize your losses and have an edge. So these are tips for small account. I just highlighted three, but as we move, I will talk about more. So number one is use smaller time frame. Use small time frame when trading small accounts. Because if you don't use smaller time frame, that means you will be over risking. Imagine, analyzing and finding your entry on a daily time frame. That is suicide. That is suicide. With just one pullback, you're gone. Your account is wiped. So next thing I'm gonna talk about is take high quality trade. Some said there's nothing like high quality trades. All trades are the same. It doesn't work that way. There are some trade that when you take, this, you are very confident in that trade. Yes, this trade will work, even if it doesn't work. But at least before you press those buy or sell buttons, you had that confidence. You have confidence. So that's a high quality trade that it will definitely work. But even though it doesn't work, you did the right thing, maybe because you follow your trading rules and stuff like that. So high quality trade also work with following your trading rules, your trading principle. The next is stay away from high volatile market. Someone with a $50 account will be trading gold for God's sake. Someone with $50 account trading Nasdaq and stuff. Even volatility indices. How can you trade volatility indices with a 50 USD account? It's suicide. I know there are a lot of stuffs, people posting it on Instagram, YouTube and stuff like so. People growing small account, maybe 10 to 100 and so, with a VIX 75 or the volatility indices. Yes, it's possible. I myself have done it many times, but you as an amateur, you need to stay focused. You need a very big balance, a very big deposit, so you could withstand pullbacks and all all the stuff. The next I'm gonna talk about is the issue of what will I put this? Give yourself multiple chances. Some people have a $50 account and the stop loss will be hitting 25 USD. That is over risking. You're risking 50%. It's not done anywhere. And the volatility indices, with just small move and you put your stop loss there, thinking you're risking, you're applying proper risk management. Your stop loss it will hit -20. It will hit -$20, and that is something that is not good. It's almost half. What if you lose 3 times consecutively, 3 times consistently? You're gone. You're out of the market. You're wiped. Because it can happen. But once you trade currency pairs with $50, I'm not I'm not criticizing synthetic indices. What I'm saying is, when you want to trade synthetic indices, you need a very more large equity than that of currency pairs. You have a currency pair of 50 USD account, your stop loss will hit -1, -2. You can trade a $50 account 10 times before 50 times before the account be wiped. And how can you lose 50 times consistently? It doesn't make sense. That means you don't know what you're doing. Hope I'm making sense. Then the next thing is about complicating stuff. If you have a small account, analyzing, jumping in different time frames, 7 time frames, using 17 indicators, stuff, just complicating things. When you're using a small account, not just small account or even any account, it's better for you to use a very, very, very simple strategy. Like when I started, I used to use the strategy of support becoming resistance, for instance. Then the price move and then come back, giving me a support. That's a resistance becoming a support. Then I'll execute my trade. I'm going to pull my entry will be here. That's what I do. Support becoming resistance. So stuff like that. That is just legit what I actually. That is just what I do. Okay, now. So we talk about is 3 ways to win in Forex. Just 3 ways. So the first thing there is coding winners. Alright, let me not just jump in this thing. Let me not just jump to it. Okay, I need to clear something first. Anytime you start trading, or not even trading, maybe you purchase a course or online class, something like that, they will tell you not to be greedy, right? They'll tell you not to be greedy. And what will happen? You go back there and just do what you are told not to. Just exactly what you're told not to. That's what you're going to do. Because people think closing what is it called? Closing trade early. Yes. Closing trade early means you're not greedy, you're contented with the small profit you have. That is the number one greed. Guys closing early. That is the number one greed. You see something like this, people, you see someone having a profit of minus one, plus positive one, positive four, positive 2, positive 8, stuff like that. Then when it comes to the negative side, you start seeing negative 20, negative 22, negative 15. They are nothing like the profit, because they close profit early and they keep the losses big, because they hold the loss in case, hoping for it to come in blues, and with the smallest blue they have, with the slightest blue they have, they close. That is greed. Some people think holding it is the greed, but closing it early, that is greed. When you know this thing has more potential to move towards your winning direction, and why are you closing early? That is the most destructive thing. The next, I'm talking about holding winners. That's, I just highlighted that, holding winning trade. When you are winning, just give yourself, just look, analyze more. That's why trade management is important. What people think, they think it's all about entering and exit. The first step of trading is of executing trade is analyzing. After you analyze, then you enter entry. And after your entry, what next? Then trade management. After trade management, then exit. So trade management is whereby you trade your stop, or you keep analyzing as the market push. So when you see weakness in the momentum, that's when you close your trade. But when there's increase in momentum with your direction, I don't see a reason for you to close the trade. Keep it and let it sink. The next thing is scaling in. Scaling in means when you're holding winning trade and more opportunities keep coming in, you keep entering trade, so that now this new trade you're entering, they won't be, even if they lost, they will not be subtracted from your balance. It will be from the profit you're making. Hope I'm making sense. So that's why it's I scale in sometimes. Sometimes I don't enter with much trade, as you see. I enter with 4, and I minimize what I apply proper risk management. So as it goes in my favor, in the direction I anticipated, then if I see possible entries, and I'll enter more trade. And if the market push and I still see more possible entries, I enter more trade. So now my trade doesn't depend on my balance, but to the profit. The next is just to master your strategy. This thing, just vice versa. Keep repeating it, keep doing it again and again and again until you're used to it. So that is legit all I have for you. All right. I know you might be wondering why you are not being profitable. What? You're doing everything you're taught. Trend line and stuff, like you're doing everything, but still you're not being profitable. I know stuff like that disturbs you a lot. Alright, it's because you are trading like a robot. They don't think. When you purchase a robot now, a robot it's maybe a robot is programmed to follow this rule. I'm coming, sorry. To legit use anytime the price legit got to a support, it will buy, and anytime the price legit gets to a resistance, it will sell. A support, it will buy. A resistance, it will sell. Right? It doesn't think. It doesn't observe the market. But you as a human being now, you observe the momentum and the strength, and you will know if it will be a buy or a sell. For instance, now many people do line analysis. That's why they are not profitable. They depend on line. There's nothing. Price doesn't obey lines. The market doesn't obey lines. It's rather in zones also, but still it doesn't obey all this. You have to observe the price. You have to observe the price. Watch. This is why. This is how confirmations come in. This here, why all the trade I'm showing you, I took them. I also took them. I took a sell here, and I took like 5 position and closed like when I saw this in transition, I closed 3 and left 1, and the price came in, hit here, and I also scaled in more and went down there, but now I'm out, and I'm also hoping to enter more trades around here. But let's talk about how the entry went. Okay, sorry about that. I entered this trade because of the engulfing candle there. I won't talk about much much stuff because I don't want this video to be too long. But you can also, I'll be starting my online classes soon, so make sure you join and pay attention so you can, be profitable also. I entered the trade because of the engulfing candle after the price reached the resistance trend line, and I also entered this because another, what is it called, engulfing candle as the price reaches the resistance. Then here I haven't yet entered, but I'm planning to enter the trade around that place because of how will I put this? Because this the price want to go back to the resistance there and let it drop. Then it will be the M-type formation. Then I'll execute my trade, or I'll wait for a break of this small move here, this small trend. So when it's broken down, giving me a retest, which is retesting this place, then I'll enter. That's how I keep this simple. See, there's volatility in this, but I still trade in a very simple manner. I don't do things that sometimes the market will be very, very challenging. You will be seeing things will be tricky, but you have to let it go. You must not trade every day. You mustn't trade every day. When your setup is not meant, leave everything alone. There's something these mentors tell you. They say have a relationship with one peer. Yes, I have a relationship with peers, not just one but many peers. Have a relationship with one peer like me. What they're trying to say is stay on one peer. As an amateur or beginner, if you are trading one pair, you will start. This is how what will start happening. You'll be looking for entries and looking for opportunities even when the market is not giving you any. You have to force them, and you see you're not doing the right thing. Hope I'm making sense. So what I'm trying to tell you is when we start our course, I'm going to talk about strength and momentum. Okay, we're going to talk about strength and momentum because line analysis doesn't work. It doesn't work. You can't just depend on this trend line or this resistance. They don't work. I always talk about this. We're not interested. Like, okay, we don't just depend on the price getting to resistance then we sell. What we look at is how the price got to the resistance, how the price got to resistance, or how the price reaches the support, or how the price reaches support, because that is what we're interested in. That will be our focus. see. So people now, and okay, people like, some people, emotional people. For example, the price legit immediately the price hits the resistance trend line, they will sell, and the price just move with just small pips upward. This volatility on 5, maybe even your $10 account might be wiped with this move here, this move upward, or even if it's not wiped, it will be hitting -3 or stuff or something like that, and you already emotionally, you are gone, you're feeling it. And there's another place to cater for. You're feeling it. You're say, oh God, I lost this trade. Why you didn't wait? You have to wait for your setup. Maybe I'm analyzing here. You have to wait for your setup to be meant before before you enter. That person entered early, although this person doesn't even know anything about momentum or strength. No. But with the way I'm seeing this trend, with the way I'm seeing this in this scenario now, it will be very hard for this trend to turn because of the momentum of the buyers, lower lows and higher lows and higher lows, higher highs and higher lows. So it will be very, very hard for it to be possible. So line analysis is nothing. So if you're really interested in the course, make sure you follow me on all social platform and DM me. Then our team will get to you and tell you the procedure and stuff like that. Then they will put you through. So nonetheless, this is FX Spiders signing out.